All righty. And now my trading warrior brother, Ashraf Laidi, who I've had the pleasure of interviewing a few times, maybe a handful of times, and always a combination of compelling ideas about the market, and we always have a good time talking to each other. For those that don't know Ashraf, he's an independent strategist, trader, founder of Intermarket Strategy, author, so he's written a book, Currency Trading and Intermarket Relationship. He was with City Index for a long time, where he focused on global macro environments and foreign exchange, and he could be found at ashraflaidi.com, which he created in August of 2008. My trading warrior brother, Ashraf Laidi, great to have you here, buddy.
Dale, how are you? Thanks for having me. Thank you, Steve. Thank you, Joe. Dale, how are you? And how's your health, by the way?
I'm breathing in and out and trading and, you know, surviving COVID. So all is good, buddy.
I hope the more QE the Fed does, the more equivalent it will be for medicine for you, no?
Okay, well, I'm injecting reserves right now, so I appreciate you coming here on a Sunday to be with us, and I understand you have a topic that you want to cover, and
yeah, let me just thanks for having me. Let me just try to get this right, because I'm going to share this screen. I hope I share the right screen, because I've got the PowerPoint presentation.
Okay.
My voice is good?
But yeah, very good, clean.
Yeah, I'm going to do the PowerPoint presentation, and I also want to be able to go to Bloomberg when I wish to, because I don't want to bore people with a static PowerPoint slides. I want to be able to go to a live chart, even though it's a Sunday. So hopefully when we have time. How much time do we have? It's 2:10 p.m. right now. How much time are you giving me?
45 minutes.
45.
Yeah, another 40, let's say, left. Yes.
You guys, man, come on. It's a COVID generation. You guys got to give more.
I'll tell you what, Ashraf. Whatever is left, we can resume on a face webinar.
You will
right, Dale?
Change.
He's
Absolutely.
Always welcome. Yeah.
Absolutely.
All right, thanks. Yeah, I think 45 minutes we can do it. So yeah, because I want to, yeah. So let me just share the screen, and which screen should I do? Boy, so.
Nice microphone.
Sorry?
Nice microphone.
Oh, thank you, thank you. I think I need to add the little sponge thing that makes the voice softer, and maybe we can get a record with the Grammys and stuff.
Yeah.
Let me do this one. Share. Can I select more than one?
One at a time.
One at
a time, Ashraf. Yes.
Okay. Oh man, Zoom. They're all way behind.
There you go.
So you can see the
slide.
PowerPoint now?
Got it.
Lovely. Excellent. All right, and you can see, let me see this.
Applying intermarket fractals contents now. Second slide is up. Yep.
All right, good. What about the chat? Can I see the chat if there's anybody has a question, or no? I will not distract myself with that.
I could see the chat.
You can see the chat.
It'd be on the right-hand side of the screen, and I could relay questions if
Excellent.
when they come.
Right. Okay, very good. Okay, so let's kick it off here. So let me just start with something here. I saw the guest list of the Trader Summit, the speakers. All right. And you've got some guys with some compelling reasons why the dollar is going to go down, why the Federal Reserve's cushion and absorb, purchases and so on and so forth is going to be awesome enough to absorb the risk aversion. And then you've got some other people, probably who were not invited, but other people who the listeners are aware of, who talk about things like the milkshake theory, where basically the risk aversion and dollar financing, and when the next storm hits, there's so much money out there, and there is $56 trillion worth of dollars outside the system that the Federal Reserve cannot turn off the fire on, and therefore the dollar is going to go up. And all of these are compelling reasons. Then you've got the deflationistas, the people who believe in deflation and gold will actually be boosted, but it will actually be good for the dollar, and so on and so forth. And the listeners, the attendees of these summits and of these PowerPoint presentations, they've listened to the most smartest thesis for both ways. Dale, if I meet you at a wedding or an airplane, I'm going to give you 5 compelling reasons why the dollar is going to go up in the next 4 months, and I will give you 6 or 7 or 5 compelling reasons why the dollar is going to go down or up. All these are smart people. They're all smart people, and Real Vision has been an amazing revolution. They've got great guys who argue for everything, for why it's up, why it's down. Okay, so because this is 2020, so what I am going to do, I'm going to try to incorporate the thesis that I give based on cyclicals, based on technicals. But then what do I do in the middle of a move? We can all predict, you can all predict a dollar rally of 5% or 4% or a decline. But what do you do when you're after that? What do you do when you put close, when you put sell, when you close, when you get money in your trading platform? What do? Do you boost to your friends, to your family? We can all, lots of us can call tops. Lots of us can call bottoms eventually. But then what do you do afterward when you've made your 7 or 5%, when you're in the middle of the range? So that's what I'm going to try to take you through a voyage. And I know there is something called the top-down approach, which it's an expression that's been used left, right, and center. I remember, I was my days when I was in the, I was working for a United Nations fund, and then we had these guys, Goldman Sachs Asset Management, JP Morgan, Credit Suisse, and they wanted us to be their client, and everybody was having one sexy presentation after another, and they were talking about the top-down approach and the bottom-up approach. And my boss said, okay, stop. Stop this. It sounds like we're going to do something else. The top-down approach. I don't want to use the word, but he said it seems like we have to be over 18 here. Stop trying to seduce me with these things and tell me how you make money. And I don't want to seduce you. I don't want to use all these fancy points, because I want to tell you how I use my approach and how I use my approach. So let's get through it. So basically, and I know these are fancy words that you want to draw somebody to a presentation, so you stop them from being with their kids on a Sunday, right? So you say fractals and FX, and don't watch the football game, don't go shopping, listen to this about fractals. It's sexy, it's good. But I'm going to try to actually, and I will, put it down to work. So fractals in trading, they're recurring patterns that are self-similar across different scales. They have, you can find them with different sizes, but with the recurring pattern. They're created by repeating a simple pattern or shape presenting order in otherwise chaotic, noisy price indicator chart. And I know a lot of attendees have seen me doing this in other summits, other PowerPoint presentation. I did one in New York, in the New York Expo, but a lot has happened since then. So let's go. So building your own top-down thesis, let it come to you. Don't force it. Don't force it. And I know a lot of technical traders, they say, listen, man, I don't know. I'm not smart enough to know what the Federal Reserve is going to do or what the ECB. I just look at a chart. I call it as it is. I look for my indicators. I get in and I get out. And that is valid. And that is what you, the listener, want to hear. Because when you take a time off on a Sunday, you want to hear, well, I don't want to, but a lot of them want to hear a simplified approach, very simplified approach. I don't want this guy, Ashraf Laidi, he wrote a book about intermarket analysis and so on and so forth. It's too complicated. I don't want to go to university. I just want to know how to buy low and sell high. That's true. But you have to look at the big picture, and I'll tell you why, before you start to, stack up and buy low and sell high and when to get in. So this is a chart, and again, this is the least technical of the charts that I'm going to put, and then I'm going to go into technical charts like these and like that. But in early 2017, when everybody was saying, you know, a few months after Trump won, everybody said, well, you know, Trump is going to be good for the dollar because he's going to bring money home. He's going to be, you know, tough on foreign, you know, competition and so on and so forth. And the dollar reached a top basically January 2017. And if you want fundamentals, we'll give you fundamentals, but this is not going to be about fundamentals. This is going to be technical, and it's going to be intermarket technicals and fractals. And how do you put it to trade? And I will show you, because I'm all about examples, real examples, how basically these things work and how we made money, but how we lost money too. But this just to give you an idea. This guy called Ronald Reagan, he launched a war versus Japan, a trade war. And that coincided with the top in the dollar, 80 to 84. Then you had Bush versus foreign steel in his second term. Not the first, actually in the middle of the first term. And it was actually February 2002 when the dollar peaked, because he decided to announce a war on Brazilian steel. Some of you remember, some of you don't remember, some of you don't care, because I just want my signal to tell me, my RSI to tell me this, tell me that. And you should do that. I'm not talking down to it. You should do it, because I'm going to show you how the RSI breakout, how to apply RSI breakout models after you've made this thesis and you sounded smart to people and those who go on TV. I had my fair share of going on TV and, you know, in the US and here. But now it's about being right and making money. It's not about sounding smart. But
we all agree.
But I want to do both. I want to sound smart, but I want to convert it to money. And I'll tell you why these long-term things are important. So basically, if you want, you know, the fundamentals, listen, this is not 1980s. You know, US trade actions are no longer going unanswered. The most recent example was Bush having to reverse the 2001 steel tariffs after the EU threatened blah, blah, blah. And the same thing happened in China. And now China is not like the Europe of 1980s. China is not the Koreas of 2001. We're talking about, you know, funny names like TikTok and stuff like that. But, you know, the game has changed. And so let's just go. Making your way down from that chart. Basically, if you didn't get the picture, you've got lower highs. Now, here's an example. After I did this, 2017 top, okay?
Yeah.
There you go. This is another analog. This is an analog. March 2015, okay, October 2000. So the red and green chart, October 2000.
Right.
And the other one is February 2002. And this is similar to January 2017. And this one, around 2001, is similar to December 2017, 15, and March 15. And basically what happened, if you're copying a cheat sheet, so when I did this chart, Dale, this one, we were here. We were here. And the chart doesn't lie, 2000, we were here. And obviously this thing went down. It didn't go down because Ashraf Laidi came out with this thing and he predicted about steel and this and that. Because if you like to cheat in school, you just cheat with this. And you look at the analog of 2002. 2002, what happened? We fell. And that was January 2017. And we all know that January 2017 was a stellar year for everything else but the dollar. It was a bad year for the dollar. Now, then everybody's going to ask me, okay, Ashraf, we know always you come in on Twitter and you say, well, the dollar's going to fall. Well, how did you do in 2018? How much money did you lose? You're right. So let's go. So guess the next chart. So this is an exercise that I do with people. I show them this. Oh, wow. He's taking us, well, I don't like it when Ashraf takes us to this long-term stuff. But this sounds interesting.
I do.
And you have an idea what it is. So basically, this is a dollar index 16-year chart.
Nice.
And the highs, 71 was the collapse of Bretton Woods and so on and so forth. But 69 was actually when the dollar was still holding and the market was still closed, fixed rate and everything. But there was the surge in nations' demand for the dollar gold exchange. You know, there was, you know, the gold. All of these guys were saying, listen, it's time to pay up. Things didn't really break until 71 or 73. But 69 would think, and 69, 85, you do your math, Plaza Accord, 2001, the top 2017. But the key is that this did not go up, and I'll show you the live chart later on because this looks ugly. Well, you don't need to take my word for it. We all know what the dollar index is. It's here. It's a 92 or it's a 94, but it went to 93. Okay, so it's here. So this chart works, and the cycles work. And if this doesn't wake you up from a boring, tired Sunday, then I don't know what will. But actually, no, I know what will, because this is just a warm-up.
I'm awake, Ashraf. I had a few cups of coffee. So it looks like that cycle work bottom, and we're probably not due for a high for what, another few years, right?
A few years. But that's not enough. How do I make money in this? Don't tell me this. This is great. Don't tell me about the birds and the bees and the Big Dipper and what happens tomorrow. Is it going to rain or not? Don't tell me how the stars are aligned. You're not trying to seduce me. That's it. I'm your client. No, trying to tell me how to make money. So, and by the way, I tweeted this in May 2nd, 2020, just to, tell people why is it important? And I'll tell you why it's important. I'll tell you. So when you're here, so this is basically a top-down approach. So you've got the three top here, all right?
Right.
2000, there's a band called the Four Tops. So these are the three tops. So 2000, 2001, 2002. Then you've got 2015, 2016, 2015. And this baby never looked back. But I'll tell you where Twitter goes crazy and CNBC goes crazy. The dollar boars and the dollar bears, they go crazy. Everybody goes crazy. And a lot of people lost money in here, my dear friend Dale. Here, March 2020. Everybody who got hurt, long dollars in 2017, they said, this is it. Dale, I will give you £5, $5 for every person in your FX street who told you that dollar index is going to break and it's going to go towards 105 and 110. I will make you a millionaire if I give you 1 pence for everyone that you heard in Forex Street, in Essex Street, and Playboy, and everything that will tell you that, oh, the dollar is going to break because the market is going to crash because we have a depression, because COVID, because the dollar is the only game in town. You don't need to say it. I'll say it for you, Dale. March the 6th, I was in New York. I took a video in front of the Federal Reserve Bank of New York. I had and that famous weekend when Saudi Arabia said, screw you, we're not going to cut production. Go to hell. Remember that Sunday, March 7th, and the market and oil crashed 40%, and the euro went to 115, and then it went towards 108. And everybody said, this is it. This is the moment I've been waiting for. My FXC, my UUP, it's going to 105. And I said, no, it's not. I said, no. I said, no. And I was wrong for a bit. And I lost money for a bit. But I'll tell you why. I'll tell you why. I stuck to it. All right. Is it too much shouting or no? What are the people saying in the questions? I can't
someone's smiling. They love this guy. Someone's saying I have to get you on Face as soon as possible.
Okay, no. I don't want these comments. I just want, oh, that's too much screaming for me. I can't.
No one has complained about your screaming. Good so far. Joe said, you have a witness to your story. What the story you just told. Joe Perry was there in New York presenting the same day as you. We work with Joe, so he remembers that. So there you go.
Guys, my God,
we have a witness.
I have 15 minutes. Oh, listen, I don't want to be booted out. Okay, sorry to cut you, Dale.
That's all right. We have a witness.
Because there is a lot to put in, and it's very important. And this is how to help traders, how to build the thesis, and how to be confident. When you have a thesis and it's going against you, and you're losing money, if you're a retail trader, you don't have a lot of experience. When do you say stick to your guns? But you're an amateur. What guns are you sticking to? Versus being too stubborn, right?
Fine
They're
line.
being too stubborn. What do? Stick to your guns if you're comfortable with it. If you have what confidence? I started trading 4 years ago. Is that enough? No, it's not enough. It's not enough. Listen, I'll tell you something, and I'll be very serious. So you've got guys, let's say, and I'll take two guys. Let's say Brett Johnson. Brett Johnson, milkshake theory. He says the dollar is going to go down. I'm not sure when. And then you've got, and he's got these amazing theories. I don't agree with him. I'm more of the school of Alden, Lynn Alden. I believe her name is Lynn Alden.
Yes.
You know, I like her case, but I believe more in her case about the dollar will actually pull back and it will end up lower. But it's not about taking cases. It's about what. It's not because she sounds more convincing, Brett sounds more convincing. It's how do I use my own instruments analysis to fit to which story. Then you have a third camp. Third camp will say, I don't need to be partial to when the dollar, whether the dollar is going to go down 5% or it's going to go up 10%. I'll just trade it as I see it, because you know there are some guys who use false modesty. They say, I don't know much, I'm not smart, I'll just go into my chart and I look at this, and then I don't know what the Federal Reserve is going to do. Some of them are truly modest, and some of them, they like to play the false modesty, and they say, I don't know what the Federal Reserve, that's there, they don't know, the game is, I just look at my thing. And a lot of people do that. But I'm not going to claim that I will do that. I have my thesis. You have to build to it. And here's the thing. So when you have this convinced me that this is going to go down and this is going to repeat itself. And I'm going to show you countless examples of fractals, not 5-minute fractals, not 10-minute fractals, and but something that is strong enough for you to hold. Strong enough for you, Dale, when you are losing money and you're about to be margined out, and you say, man, do I put more money and I stick to my thesis? Do I put more money and I stick to my thesis? Or do
I'd have to ask my wife first.
Yeah. Oh, yeah. Or ask my wife.
Before I
yeah,
loaded up my account again, right?
Just like boiler room. And hey, who makes decisions? You or your wife? Anyway, so yeah.
Yeah, she does.
But, you know, so let's go. All right, then came along 2020. So 2020, this baby came here. And this was tested.
What is that, a diamond?
That's, yeah, you call it whatever you call it. I don't want to say, right. Oh, Ashraf is the king of diamond trading. But it's, you know, oh, he says, oh, keep me away. Don't listen to anyone who does diamond fractals.
Oh, it could be a ruby.
Yeah, but whatever. Call it diamond. Call it whatever you call it.
All right,
I'll call it. You'll get your 7-year-old kid, and you'll say it is similar. So basically, so this is early 2020, and here's where so then you go to the monthly, and then you say, guess what? Not only the candles are similar, but the way the 55-month moving average is being respected and is being broken is similar, and the trend line, and the RSI. Okay?
Yeah.
Now, did I get your attention?
Got
after
it. Oh, it's a trapezoid.
Sorry?
It's a trapezoid, Randall said.
You can call it trapezoid, call it whatever you want. After 25 minutes of shouting, I've gotten your attention. Now, let's apply this to work, to the trades. All right?
That's the key.
But before I do that, look, gold weekly, 1998, 2004.
Yeah.
Uh-oh. And then February 2020, weekly. Oh, my God. So this is good. This is very similar. 98, all right? And then 99, the dollar was the only game in town. All the money was going abroad. The technology bubble was pushing up. Yeah. Stocks were going up around the world, but money was going into the tech and blah, blah, blah. Then 99, gold pushed up, pushed back down. 2000, the recession of 2001 came in, started actually 6 months before September 11, 2001. Yeah. And because when we went to 2001, September 11, the US was already in a recession. It just wasn't in the books. But look at this similarity, okay? Now, and this chart, my deal, Dale, is an old one. It's from February 2020, okay? It's not a new chart, it's an old chart. But when gold was 1673. I got this PowerPoint from this slide from an old presentation, but just to give you the idea. Now, we all know where we are in gold. And I'm going to show you how I called the top in gold and the top in silver on August the 6th. I will do that if I have more time. Okay, and I should have more time because this is very important. Because what I'm going to do in the next few slides, I'm going to take how I mobilized all the troops into putting my money into selling dollar and buying gold, even though I got hit a few times, you know, a few false dawns, which was in March and April. So here's the thing. Integrating event risk to technical analogs. So I'm going to take you back to the dollar, but this is just for you to know. Sterling dollar example. A lot of people may have heard that I was very bullish in cable, sterling. Not because I know what the hell's going on because I live in England, but because I was using something. And here is something for you guys to look at. So this is the 1992 ERM exit crash when the sterling exited out of the exchange rate mechanism. No, it's not the Eurozone. No, it's nothing to do with the Eurozone. No, the sterling was never part of the Euro. No, 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 no. But the ERM. I'm not gonna explain it because we don't have time. But basically, sterling crashed because of a European-related event, crashed 20%. It consolidated, came back down, and it broke. A very similar event, a European-related crash in sterling, 2016. Baby,
Right.
if this is not fractal, if this is not an analog, turn off your computer, go do something else, go for a jog, go for coffee, go watch the football game. Because if this is not a 30-year
Identical.
that tests the time, go home. Okay, fine, you got my attention. How do you trade it? How do you trade it? Okay. So, all right, and need I not to tell you that cable went towards 135, and actually it's 134.80 because we did tell the clients why it's going to go to 34.80 and it's not going to go to 35. So this baby worked. Now let's take you back to the dollar. And this stuff has been, I've been sending this to clients and PowerPoint presentations, you know, the one that matter, you know, every other few months. And if that's not enough for you, well, that's enough for you. So 8-year cycles in sterling. You got to keep these things in your pocket because when you're buying the thing and it goes down against you, when you're going to be margined out, you stick to your guns and you use things like this and things like this. Let's do the math. 1977. Yeah, did you know that sterling and the UK got help from the IMF? Nobody knows, nobody cares. 77. 77 plus 8, 85. 85 plus 8, 93. 83, 2001. 2000 plus 8, 2009. 2000 plus 8, 2016, 17, same thing. Yes, we did come back towards 114, but we did not hit the low. Did we break the low? Now, 2016, there was some trading platform. I was trading with FX Pro, and I had, actually, sorry, not an FX Pro, with the House of Borsa, really, truly, not a market maker, and straight through. The guy was, I got 114 that day. 114. Let's get to it. 114. Bloomberg gave 115, 116, I think, you know, that famous day of October 2016. Okay? The referendum was June, but the crash, it was 116. I got 114. But, and that's important because September 3rd, the birth of my, you know, third kid, September 3rd, 2019, that's when we had a big low in sterling dollar. And then we had another big low in March or in April. But the relationship held, my friend. We did not take to new lows and the cycle held. All right, let's get back. What it means for euro dollar, because everybody trades euro dollar. The world's top traded FX pair. Once upon a time, and I wrote a book that I wrote 2008. FX, the euro dollar is very important. Yes, USDX is important. The euro dollar account for 27, 25% of the online FX turnover market, which is around over 6 trillion, and it's important. Whoa, what is this? Wait a minute. Aha. So this is the euro trade weighted index. So this is basically in around May 2000. So this is euro dollar inverted head and shoulder. And 98, and we know, and then we just went to 110 because the thing went to 120. Never mind. Never mind. What is this? Give me something I can trade in my broker. What on earth is this? Who cares? This is the euro. This is the equivalent of the dollar index. This is the euro equivalent. If it's showing you this inverted head and shoulder, which you only find in page 5 of textbook of patterns of John Murphy's, 78, or you find in page 79 of that thing called stocks and commodities, you only find it in textbook. If you find this, it's going to break, and you will apply it, and you will apply it to euro dollar. Now, And this is an old chart. Now, the other great analog, for those of you who like fundamentals, I can analogize, technicalize the fundamentals. Are you sitting down or are you sitting down? Are you sitting down or are you sitting down? And I mentioned this to Dan Gramza, who was at the New York Traders Expo. You know Dan Gramza, right? Yeah. So he gave me a video, on New York Expo, and I mentioned this to him, and he was paying attention because he knows his FX, but nobody else could understand what I was talking about, and it's frustrating. And I was using those bad habits where I would raise my voice in order for people to understand, but I realized that that doesn't work. You don't raise your voice to understand. You just show the chart, or you spend 5 hours. So I'm going to do it. So this is Euro Dollar weekly. This is the 10-year minus the German 10-year minus the US 10-year. Okay. Yeah. And basically German 10-year minus 10-year is the spread. As the spread worsens, Euro Dollar usually goes down. As the spread shrinks, meaning there is less disadvantage for Germany, it's German and it's not US minus German, it's German minus US, because this is Euro Dollar and not dollar Euro.
Right.
But that's all great, right? But here is where the money comes. Here is where your confidence comes. Here is when you're losing money and you're saying, damn, my thesis is not working. Where is it going to happen? Well, guess what? So this not always work. It's not always correlated. And even the big, nice global FX strategists in the big banks, they said, well, yield spreads are being applicable. Oh, now it's not yield spreads. Now it's risk on, risk off. But Dale, here is where I'm going to get your attention, because you look so intent. You look so attentive. You look so attentive, but I'm going to reward you with that attention because I'm going to make it easy. So are you ready? So you don't need to even put your body in front. You can step back. You can even lean back, and you can still get it.
Okay.
Just relax. Your health is more important.
All right. I'm relaxed.
Okay.
Hit me.
Okay. So basically, some people said, well, if this thing usually works with this, which one comes first? Which one leads the other? Right? If the spread does it, so I looked at it. And so what it is, so this is Euro Dollar. And what it is, now this is where I'm getting your attention. You see this thing here?
Yeah.
This is from the bottom of the spread to the bottom of Euro Dollar in October 2000, it was 16 months. Actually, it was not 16, it's 17. I later corrected it because what happened, and I'll tell you why, because Euro Dollar went to 107, went to 115, and then it went back towards 108, you remember? Or 107.
Retest,
actually.
yeah.
It retest, and then it went back up. So I redid my math. But this chart, and I will show you the live chart from Bloomberg, because I am honest with you and I'm very transparent. I don't BS anyone. This is from the March Expo in New York, and it was 16 months. But you know what? This is not 16, it's 17, and I'm going to prove it to you. But the idea works, and I'll show it to you when I go to Bloomberg and I take it back. What time is it, man? Okay, so basically 16 months later, after the bottom, this bottom, and 20 years later, you can't make this stuff up. You can't make this stuff up. The spread reached the bottom, and then only 16 months later, Euro Dollar reached the bottom. And if that doesn't get your attention, you might as well turn off the laptop, turn off your computer, switch off the power supply, change it to something else, and go do something else. And actually, you know what? Since we're at it, let me change the screen to Bloomberg, okay? Because I want to show you the live chart, because I care about people who says, oh, he's using old charts. And we don't want to do that. We don't want to misleading people. So what do I do? Where do I change the thing here?
So you stop sharing.
I go to
do a new share. New share.
I go to new share and I go here. Okay, let's go. So, and you don't need to take my word for it. So this is the chart, okay?
Yeah.
So when I take do you see the arrow here?
Yeah.
You see the arrow?
Got it.
I'm taking the arrow and it will tell you how long is this distance. What does it say? What does it say? The span. What is the duration of the span?
5.
No. Look at the blue, blue rectangle.
Yeah. Okay.
What does the span say?
17.
17 months, because it's a monthly chart. So 17 months between the time where we bottomed here in the spread. Okay, 2,
Yeah.
because this distance measures from this low to the low of the price of euro dollar. 17 months.
Right.
Are you ready? You get it. Now, and I take you 2001, 2002. Some of you got married. Some of you got divorced. Some of you became mature. Some of you made money. Some of you lost money. Some of you started companies. Some of you started to pay to politics. Some of you lost money for the 5th time. And some of you gave up on FX for the 7th time. And then you go to 2013. And then you go to 2014. And then you go to 2016. And then you go to, and then everything becomes very, very, very political, and Trump and this and that, and people take to Facebook, and then everybody says, screw FX, I'm going.
Who gave you my diary?
Exactly. I know. And then people are going to go, oh, I'm going to get back to FX. It's time because, you know, the game is all the VIX. And then you go in here, and guess what?
17.
What does the span say? What does the span say?
Sweet 17.
17. The distance from the low to the high. Like, you know, Baldwin said, have I got your attention? In Glengarry. Get your attention, acquire interest, and now hit them. Okay, now I'm going to hit you back. So I'm going to go back to the PowerPoint presentation because we're just getting started and we're just getting warmed up. Okay, and okay, new share.
So when you knew you had 17 months, Ashraf, for the euro to bottom, what did you do during that time frame?
I'll tell you what I did.
Just waiting.
I'll tell you what I did. So basically, so this kind of works, and this tells you that even when euro dollar went back towards 107, 106, I said, because when it went to 115, you know, so I was in an Arabic TV in Dubai in January, and when euro dollar was what 108, and I said to the presenter, I said, here's why euro dollar is going towards 120 this year. And I said, and they don't like technicals. So I said, here's the fundamentals. The fundamentals is that Lagarde is going to come in, inflation doesn't work, and what she's going to do, she's not going to do QE. She's not going to cut rates. She's going to do QE, but she's not going to cut rates because she realized that's bad for the banks. You're not going to cut rates, and the Germans will have to raise fiscal. Will have to go fiscal. And when they go fiscal, and when the Fed is going to come in, and they're going to have to cut interest rates, that is going to push it up. All the rest is detail. And that's that. If you want the fundamental, this is, and I called it ahead. I called it. So again, the Germans were criticized for not doing a lot of fiscal. They're saving the trade surplus. So what they did, when they did the fiscal, they saved the money on the ECB of not doing cutting rates. Meanwhile, Powell started cutting rates every other week and start injecting every other week. And then what happens? What happens? The interest rate differentials between the US and between Germany is shrank. And this baby that you're looking at, the spread, the 10-year yield, it shrank. Now, euro dollar, rare but effective breakout RSI models. Oh, so when the euro dollar started to push higher, and so it went to 115, it went to 107, and it started meandering. All of you who trade FX will know euro dollar was meandering between 109, 110, 110, 109, 110, 111, 110 for a while,
Ranging.
And it gave us false breakout many times. But this is the RSI breakout model that worked for me, and I said, this baby is going to town. It's going towards 115 and 170. It's not a pattern. It's not the leaves. It's not Lagarde. It's not the Germans doing much better handling of COVID, even though that works. It's not that Trump has no idea what's going on. It's not that Powell keeps on injecting and injecting and injecting, 20 times what he did in 2008. He did it in 1 week. That's all right, but it's not just that. This is the breakout. This is the oscillators that I mentioned to get your attention, but I wasn't lying, to get your attention in the oscillators breakout in the intro. This is how you apply it. So this is an old chart. RSI breakout, what am I talking about? Well, listen. So these are the most important patterns in the life of the euro for me that held on, that is called the breakout. Forget the moving averages. Look at this. 2002. This is when the bottom in the euro happened. This is an RSI, weekly RSI, and we broke out. And we broke out, and it was the beginning of something serious. It was the beginning of a bear market. Do you remember what I said about February 2002, Dale Pinkert, when I was boring you with the trade war and with the top in the US dollar in February 2002, and Bush going trade war on Brazil. Do you remember that? Well, if you RSI it, if you technicalize it, if you're going into retail FX and you want to convert nice talk on the papers to money, here's what happened. RSI breakout. Steve, I see Steve with his red shirt. Don't kick me out. I still have 20 more charts.
Tell you what.
I lived in New York. I know some swear words in Greece. Okay? It starts with an M and it ends with an A. Don't.
You should come to Face and you have as much time as you want. But we are unfortunately on a very tight schedule.
So how much do we have?
We're over time already.
Okay, guys. Sorry, you have to give me a 3 minutes, okay? Sorry, this is important because it's to the benefit of your attendees, okay?
Okay, 3 minutes. We'll push everything back, but
how about 2 minutes?
2 minutes.
Yeah, okay.
Go.
Okay,
go.
So basically, the RSI breakout happened here 2002. It happened in 2005, happened 2009, and it happened in 2020. Okay, don't bother trying to prove me wrong and saying the same thing happened in between 18. No, it didn't happen. And when this happened, that's it. Now you go back up. Yeah, how we traded it? Well, we have some trades. Everybody said Ashraf goes long euro dollar. Actually, shorted euro dollar. There was a gravestone doji in September 1st, which is the top of euro dollar, and we sold it at 119 and we closed at 170. Never mind. Then you have the gold silver ratio. This is what I want to talk about, putting it to good use. You know that basically when the gold to silver ratio goes up, metals go down. You know that. Okay? So now I'm going extra fast because we were chit-chatting and everything. And if you get it, you get it. If you don't get it, get the recorded version. This is yellow, but here is how you technicalize it. So basically what I said, and I basically did my math here. You go down 52, and I predicted that this is going to go up 52 from 83 to 135, and that's where we're going to top. So if gold silver is going to top, okay, that means that the bottom in silver versus the dollar is going to happen, and gold is going to happen. And exactly that's what happened. And you can check it. And what happened afterward? Anticipating and confirming cyclical breakout. When your euro dollar start to push higher, and your gold start to push higher, and you made money, and you bought euro dollar at 112, and you close at 113, and you say, oh, that's it, it's going to stop at 115. It's not going. Well, here is the thing that's going to give you confidence, because when silver break out and metals break out, that's your ticket to going all in selling dollar. And how we went long silver 10 days before the biggest breakout in 10 years. Basically, this was May 8th. We had a nice pattern here. Everybody knows it. Yeah, a triangle. But this is what people haven't done and haven't seen. This is all great, right?
Yeah.
But this
great
is
call.
And people who are going to cut me off, don't cut me off because this is important. Silver's 6-month habit of breaking above its 55 moving average. When it breaks above it, it takes off. And it happens every 6 months. You don't need to believe me. You don't need to take my word for it. Just look at the chart. And it happened in May. Okay? It happened in May. It happened in December. It happened in July 19, December 18, June 18, December 17. You don't need to prove me wrong or to prove me right. You need to do it later because there's a person speaking after me. But this gave us the confidence. And this is just not just a looking back kind of thing. This is actually what we use for the WhatsApp group. And we told them this is why we're going, and this is we're going by silver. Okay? 10 days later, again, the moving average, this happened. Okay? Everybody lost money in a false break, and you got the RSI breakout. And this stuff happens. Okay? How far is far enough in the move? Well, guess what? When gold to silver started to fall and metals started to go up, everybody said it's overdone because we got geniuses in Twitter. Everybody said it's overdone, but it's not. Because when you break the trend line support, which I called it here on July 20th, okay? Gold to silver ratio, when it breaks, that's when you say, baby. Metals went from 17 to, hold on.
Halftime break, and we continue phase.
I'm going to skip the golden triangles.
We really have to wrap it up now. I'm really sorry, but we have to.
And this is basically where you get more information from me. And this is the stuff. And this is what people said about the WhatsApp group. And I wanted to help people to try to get them into it. And this is Ashraf Laidi on Twitter. And this is Ashraf Laidi on anywhere you want it. But basically, I wanted to get into the live chart to show you where we are right now. And to show you what are we going to do with gold. and we're going to do with silver, and whether the gold-silver ratio is going to break out, and whether the dollar, euro dollar, is going to go towards 113 or it's going to bounce to 115. I wanted to tell you all of these things, but you have to respect time. Who respects time on a Sunday?
We will
I'll
have to.
I'll tell you what, Ashraf.
Sunday.
On face, we don't have a time limit. So Dale, when is your first opening for Ashraf?
I'll find one soon.
Yeah.
Okay, Ashraf,
Yeah.
you'll come on face and speak until you have nothing else left to say. Okay, that's a promise.
Ashraf,
Thank you very
I
much.
want to thank you,
Sorry, I
Ashraf,
went
for
over.
coming here today on a day off to recharge. And I love your work, and I really love your passion for what you do.
Feel free to send me a summary of the questions that people asked, and,
Okay.
Yes.
Sure thing.
I will tackle them. Yeah, do that
Absolutely,
if
man.
you have time.
Nice having
Thank you, Ashraf. Thank you very much.
Thank you, my trading warrior brother. Great to talk to you.
Bye bye,
Thank you,
Ashraf.
Ashraf. Okay, well, as you can
And here's
see,
Tyler.
Ashraf really is passionate about what he does. He's, you know,
He definitely is.
very high energy, and I respect Ashraf.